Assalamu alaikum everyone, and thank you for joining us for today's webinar. The webinar is on the outlook for Pakistan capital markets in a COVID-19 world. And this is a joint effort by the Pakistan Stock Exchange, ACCA, and the CFA Society Pakistan. We hope this is the first of many such collaborations going forward. I'm very pleased to have a distinguished and diverse panel in place today, which will allow us to have a discussion on multiple topics. First up, we have Mr. Arif Habib, the CEO of Arif Habib Corporation and a prominent industrialist. Arif Saab, welcome.
Thank you.
Second, we have with us the MD and CEO of the Pakistan Stock Exchange, Mr. Farooq Khan. Mr. Khan has recently joined the PSX and brings with him a rich background in capital markets. Farooq Saab, salam and welcome.
Walaikum salam. Thank you, Ji.
Next up, we have Mr. Kamran Nasser. He's the CEO of JS Global Capital, one of Pakistan's largest brokerage firms. Mr. Nasser is a qualified chartered accountant and also an ACCA member. Kamran Saab, thank you for joining us.
My pleasure. Thank you for having me.
And finally, we have with us Mr. Mohammed Shoaib, the CEO of Al Mizan Investment Management, Pakistan's largest private sector AMC. Mr. Shoaib is also a director of the CFA Society Pakistan. So, Saab, thank you so much for being on the panel.
Thank you.
Before we formally commence, I will briefly go over the format of today's webinar. We will have a few questions at the start that will be common to all panelists. And following on, we will have directed questions specific to each panelist. Although I should mention that other panelists are also welcome to answer these questions if they wish. And at the end, if time allows, we will try to direct some questions from the audience to the panel. So without further ado, we are going to jump into our common questions. And I think this is pertinent because I see a lot of people, I understand, are working from home in our panel. And I just want to ask you, how are your organizations faring in these difficult times? Has there been a loss of efficiency? How has the experience been? And do you foresee a change in business models? I mean, you all of you are from different businesses, PSX, industries, AMCs, brokers. Do you think we are going to see a change in business models in the post-COVID-19 world? So maybe I can start off with you, Arif Saab, and take it from there.
Yes, I think it's a different world for me. I see being a CEO of holding company of various businesses. I'm in fact at home since 22nd of March and finding it very, very convenient to in fact monitor all the businesses. The businesses in fact which we have, Alhamdulillah, have been active during this period. The securities market, the asset management, you see the fertilizer business, the cement, steel, all are active except real estate. Real estate was, I think there was no work there. So sitting at home, in fact, I was thinking that previously going to office, in fact, I was wasting my time there because a lot of visitors used to come and I used to spend half of my time to attend the visitors and the quarter of the time, in fact, discussing with personally with the team members. So all these time has been saved and I'm in a much better position to see what is happening in my various businesses. Though the production in steel is going on, but sales are very low. But cement, the export is at full stream, and the fertilizer is also doing well. Though there is an off season, and I believe that in May the sales of fertilizer will also pick up.
Understood. First up, that's an interesting aspect that Arif Saab mentioned, this question, but obviously an add-on in terms of technology. I think that's helping us so much. So what would be your thoughts on this?
Niji, I think Arif Saab is absolutely right. And thank you, Raza. I think people are already thinking and will continue to fundamentally think how we work. And I think this will have major implications for the kind of products we use, as well as the levels of employment. For PSX, it was particularly complex because we are very highly automated, And the challenge was, whenever you look at disaster recovery facilities, remote working, etc., the normal assumption is that you may not be able to access your office, but you'll be able to access some other part of the city or another city in the country or somewhere else in the world. And we had to plan that you may not be able to access any place except your own home. And how do you then keep the market functioning, without a disruption, without being able to access really any site? In the end, Shukare, it didn't come to that, and we were able to, some key staff are able to go to the office, but that's down to less than 10%. So 90% of the people are working at home. Yes, there was a little bit of chaos and a bit chaotic in the background, but Khuda ka shukar hai, at least as far as our customers, investors, other stakeholders are concerned, it has been business as usual. So that has been that was the challenge, but definitely the way one works is being fundamentally looked at.
Shubh Saab, if I may turn to you and hear your thoughts on this. How has the mutual fund industry been faring in all of this? Has it been a challenge or business as usual, as Farooq said?
Bismillah ar-Rahman ar-Rahim. First of all, thank you very much for having me on the panel. In terms of the what the other panelists have shared, I would like to add here that as far as the asset management industry is concerned, since the money markets and the stock market were both active and open, so obviously one of the very important challenges for us was to ensure that we are able to continue to serve our customers on a regular basis. And Alhamdulillah, I can say that although we have like about 27 branches all over Pakistan, of which only a couple of branches are open outside Sindh and Punjab. Other than those branches, all the branches are located in Sindh and Punjab. And because of the lockdown, they were all closed down because we, unlike PSX or CDC, we did not get an exemption from the governments to open our branches. But having said that, due to the use of technology, what we have seen is that we have been able to serve the customer on a regular basis. One thing I would like to add here is that, in fact, it has challenged the business model that we have been following. And that business model certainly was, and it will continue to be, is that we need to have more branches to reach out to the customers. So certainly now we have realized that, yes, it is very important to reach out to the customers or the investors, especially to the new clients. If you want to make new clients, certainly they are looking for a brick and mortar structure. They would like to visit your office and they would like to kind of meet and actually, because it is not easy for anybody to part with his or her money to an asset manager. It's a very important and a very difficult decision for anybody. So they would like to see the physical infrastructure. Physically, they would like to meet people. They would like to meet the management. They would like to see the office, and then they would actually start their investing relationship with you. However, in terms of servicing the existing customers, we have seen a sea change. And let me illustrate you with just one number here. So before actually this COVID-19 lockdown started, we used to do about 38% of our transactions on a daily basis, on average, in a paperless environment. So because we have the mobile app, we have the online portal, and we obviously, investors can invest or redeem with us through Mizan Bank as well. So all these avenues cater for 38% of the overall transaction, not the amount, but the number of transactions on an average basis. Now that has actually increased from 38% to 58%, which means almost 60% of our transactions are paperless. Now I'm sure that this question will come to anybody's mind. It came to my mind as well, that maybe it is because of the fact that there is a shrinkage in the number of transactions. So obviously the paperless transaction can be done, the paper-based cannot be done anymore. So there will be a shrinkage in the volume. So I looked at the numbers, and obviously we monitor it on a regular basis, but especially for today's session, I looked at these numbers and we did an analysis for the fiscal year starting 1st July 2019 to 23rd March. And then we compared that with the lockdown period, which is like about a month now. So it is very interesting to know that on average we do about 2,000 transactions per day, and we used to do 2,000 transactions per day in the period from 1st July to 23rd March. And in the current period also, we are also still doing on average 2,000 transactions per day. So there's no decrease in the volumes. It is only the composition or the mix which has changed, which is actually a good indicator that if we kind of use the digital technology and if we use the digital channels more efficiently, then certainly it is so much easier for the customer as well. So from that perspective, yes, it is business as usual, but certainly in terms of attracting new customers, because the mutual fund industry is still very small at the moment, in terms of attracting new customers, it has certainly impacted us that we have not been able to open new accounts. But inshallah, I think also we have tried to automate that as well. So not only Al Nizam, but some other MCs also, they have started this online account opening as well recently. That will be helpful. Most of the asset management companies are also doing now transactions on a SMS, right, rather than having a smartphone. You can do a transaction through SMS. So if you want to move your money from one fund to another, or if you want to redeem your money, you just send an SMS from your registered number. You will get a one-time password, and then your redemption transaction will be made. So certainly, it's a sea change in how we are doing the things. And as Arif have also mentioned, that I feel that there is a lot of increase in the efficiency. Now, one of the concerns of the industry when we actually went into this lockdown period was that we will need relaxation from ACCP in terms of disseminating our net asset value, the prices of units, which we are normally allowed until 6:30. There is a regulation that allows us to do until 6:30 in the evening. So we asked for the relaxation that we should be allowed to do it until next morning. But lo and behold, actually, what we found was that effectively, barring the first few days, 2 3 days initially, but after that, actually, our net asset value and the day-end process is being completed earlier than it used to be in a physical office environment.
So thank you for that answer. Karan sir, I'm going to turn to you. I mean, it's interesting that Shiv Saab mentioned that in some aspects you need that brick and mortar network, but in some aspects paperless is working. And I think from a brokerage house sort of point of view, and I've been associated with that industry myself. I used to wonder that every time the economy takes a downturn, brokerages take the first hit. But at least this time you need just the net and the phone, and you're functional. So what would be your thoughts on that?
Well, thank you. I think I respect the comments of all the participants, and they were absolutely spot on. The one thing that I should add is that your environment dictates the way you operate. And certainly, we have been spending a lot of money. If I were to talk about my company, then my investment into technology has been far more, in general, when you compare to your peers. And the primary reason was that I always thought that technology is going to be a game changer going forward. And the work from home environment and how to manage transactions specifically in an environment which is customer focus, where man-to-man interaction has always been considered very important. And the online business, as we saw, was increasing not at a very rapid pace as we would have liked to see it. When you compare yourself with your regional players, and when you see the smartphone penetration in Pakistan, but certainly in that environment we have done really well. And there were two occasions on 2 Fridays. It was an environment which was completely tested, from running a hot site to have BCP to completely working from home, including not just the transaction placements, but the settlement process was also run from home. And on 2 days, on both Fridays, it was successfully done, which gives me a lot of pleasure in stating that the way we thought, or maybe the hurdle that we always had in mind, that how we are going to overcome this challenge when we are going to implement technology, and we want to take full advantage of technology in terms of increasing our outreach and in terms of increasing our investor base also. This environment has technically pushed us to test ourselves, and so far I see that the capital market industry has done very well. I think it's hats off to Pakistan Stock Exchange, the regulators at the back end, and plus all the constituents, may it be AMCs or the brokerage firms or the commercial banks, and everybody has played their part, and everybody has, there have been times where accommodation and realization was required with your counterparties, which was successfully done. The investors now, initially, they were very hesitant, specifically when you talk of having a branch network is concerned, as Shoaib was alluding to. I think investors now also realize that working from home environment, they can participate as efficiently, rather more efficiently, and they can put their time to more effective use by doing so. So, Alhamdulillah, it has been very well in terms of experience, but certainly going forward, there is going to be a change in the way we operate, and people who would not change, then I think that would be a sad story. We need to learn from this.
Understood. Understood. First, I'm gonna turn to you, and obviously we're going to go into our the rest of our questions. And I think taking on from where Kamran left it, obviously a lot of industries are closed right now. The capital market is not one of them. The stock market, there was some noise in the middle, or some pressure to close it, and I think even in the region we saw some markets close. We've had a past experience on this. I guess we've learned our lessons. But what were your thoughts? I mean, did that play a role in keeping, in your decision to keep the exchange open and running and functional?
Nikki, I think that's a really important question. Or iske andar, the experience of the regional and global markets was there in front of us. And yes, I know Philippines and Sri Lanka closed down for a couple of days, but those were very short technical closures. But really no market shut down for any extended period of time. And then we had our own experience going back to 2008 when the market was shut down. And, I was there in the market. I was involved in that as was, Arif Bhai at that time. And I think everyone who remembers that period, I think remembers it clearly that in hindsight, even though hindsight is 2020, but it was clear, at least to me even at that time, and closing the market would not serve the interests of any of its stakeholders, whether it would be the investors, shareholders, brokers, anyone. So, but it was a very, very difficult situation and a very difficult decision. And, we discussed it in the board, we discussed it with the regulator, with other market participants to get everyone's view. Because unlike the 2008 crisis where it was a financial issue, this was an issue where potentially lives were at stake. So it was a very difficult decision. And, that's one of the things that we learned was that you can have as good a processes as you like, you can be as highly automated, and your disaster recovery processes can be as good as you can make them, but you are only as strong as the weakest link in your chain. So it's not only PSX that has to be strong, it has to be the whole ecosystem around. That includes track holders, that includes asset management companies, that includes investors, who also have to be strong in that chain for things to work efficiently. And there we encountered some issues, but I'm glad we were able to work with all the different participants and help them, continue operating as well. So it was a very difficult decision, but I think I'm glad with the support of everyone. I believe we took the right decision because, the decision that we took in 2008, to be honest, I think we still haven't fully recovered from that, 12 years later. The kind of market interest that we had, even when the market opened in the 90s, we had more interest. We had in terms of even volumes. It was completely different before the market closed and after the market closed. So I think I'm glad people remember that experience, and I think majority of the people were very clear that the market should stay functioning. And it would have been a really sad day if Pakistan was the only market in the world that shut itself down, whereas everyone else facing even more challenging circumstances were able to operate. So thank God, I think we took the right decision. I hope.
Understood. So I agree with that. Arif Saab, if I'm going to turn to you, I'm going to ask you a few questions. First, and we are going to come to COVID-19 and how Pakistan's capital markets are doing. But first, given what we've seen in the last few days with international oil prices taking a tumble. What do you think about that? How can Pakistan's economy take advantage of that? And what does it mean for our stock market, given that oil has such a high weight in the KSE 100? So, Arif Saab, if you would like to take that question, please.
Yes. Uh, you see that whatever has happened, and particularly the decline in the oil prices, and when I see other factors, for example, I think Pakistan will be benefited with a current account surplus. I believe that issue, I think, would no longer be there in a shorter period of time. So, as we all know, that the current account deficit was our biggest issue. Uh, the oil prices, in fact, would help in reducing the energy prices. You see, all the companies in Pakistan were facing two major problems. One was of high energy prices. Because of that, electricity was high, the gas prices were very high, and we were not competitive internationally. And the finance cost was also very high there. So these two count, we have seen some relief, and particularly in the oil prices, the prices have crashed down. Though because of that, our exports, in fact, are also suffering. Our remittances or will also suffer. The market prediction is that the remittances in April would be okay, but in May and June there would be a big shortfall. But on net basis, I believe the current account there would be a relief on current account deficit, and over and above whatever packages government in fact has announced. The post-COVID, I think that will create a lot of liquidity in the system because many of the companies and many of the sectors were struggling because of the slowdown in economy and because of the harsher measures in the last budget. They were already, in fact, struggling. And because of the state bank package, deferment of the installment payments, in fact, the facility from state bank for restructuring of the loan and reduction of the interest rate would definitely help in fact enhancing liquidity in the system. Similarly, on the government side, this COVID in fact has been responsible in having this 1.4 billion IMF support, and then the World Bank and ADBs are also in fact considering the request for additional support. And similarly, G20 decision would also help Pakistan in fact having lesser pressure of the debt servicing obligations. So post COVID, I see a lot of liquidity in the system, and that would help the businesses and the markets overall. So I see a good time ahead, provided we in fact are able to control the COVID, or at least we are in fact able to learn how to in fact conduct our life in the COVID situation.
So that's actually interesting. I'm going to pick on that point and ask you your thoughts on whether it's a difficult situation, right? I mean, at the one end you want to protect the economy, at the other end you also want to protect people's lives. So do you think the government has been striking the right balance between the need to protect the economy and the need to, of course, protect people? And of course, we have Ramzan coming up. Obviously that will be a challenging time, I understand. So what do you think? I mean, how has the policy response been from the government so far, in your view?
You see, initially government was very slow in responding to this development. And then I think they were careless in monitoring the people coming from the outer world. So these two factors, in fact, has created some issues and problem in Pakistan. Then afterwards, the government became active, and they, in fact, are handling the situation in a much better way. And these responses from the finance ministry, from the government, and from state bank and other institutions, that in fact is provided a necessary relief as far as the security and safety of the people are concerned. I think there is a need to educate the people. You see that there is a view that it would be very difficult for the government to enforce all these things through a force. But I think the people need to be educated. More and more data about the COVID development is shared with the people, and they should be taught how to read them. If we compare it with other part of the world, the Pakistan looks is comparatively in a better position. So once we in fact are able to educate our people, they themselves are able to take care of themselves, would help a lot.
Right, sir. I'm going to turn to Shoaib Saab and ask him. I mean, obviously we had a discussion on oil prices. We've had a discussion on liquidity in the system in the post-COVID environment. But sir, your high-level thoughts on growth. I mean, we've seen sharp revisions in global GDP growth, as well as for Pakistan. I think we might be entering the first recession this year in a while. So what would you think about those, or what you say about those? Would you agree with these projections, or do you think these are a bit too pessimistic, or maybe they're just maybe we have to see how COVID progresses before we take stock of the situation? What are your thoughts?
I think the first COVID patient was, I think, diagnosed in Pakistan sometime in the last week of February. So we are about 2 months into it, and right at the moment, certainly the pandemic is increasing. It is reaching out, and obviously, most of, as Arif Bhai initially mentioned, the first victims were basically people who had come from abroad. But now this second chain has started, and it is very, very difficult to say as to how long will it continue. So one of the important measures that we look at is the daily growth factor. And in our case, the daily growth factor was 1.2 initially, which has alhamdulillah come down to 1.06 to 1.09 band. It keeps on changing because we are doing very limited testing at the moment. In the recent few days, actually last few days, the number of tests have been increased to about 8 to 10,000 in a day. And the government has been mentioning, the federal government and the provincial governments, that the number of tests per day will increase to 20,000 very soon. Now, given the lockdown, the situation has been quite under control. But as we are going to open up the industry soon, we are going to open up the restaurants soon in terms, and also with the Ramadan factor, and the mosques will be open very soon as well. In fact, some of the mosques have already opened since yesterday. So there is certainly a high risk. And I think it is very, very important for all segments of the society to use their influence, especially for the ulama in the masajid actually, to educate the people who come to the mosque to maintain the social distancing, and not only the social distancing in the mosque, but also how should they live their 24-hour life, their day life actually, when they are even outside of the mosque. So I think that is very important to ensure that pandemic spread is not widespread. Having said that, certainly there are some studies which say that it will spread to 30% of the population, 50% of the population globally. So it will be like a normal flu. But I think there are two issues right now. One is that the resistance to that virus is certainly very low because there are no antibodies at the moment. The second is obviously there's no vaccine. So the entire effort actually is to kind of delay the spread of the pandemic in different parts of the world, and especially in Pakistan, alhamdulillah, it has been so far under control. So it is very difficult to come up with any realistic numbers as far as the future growth is concerned. But I've looked at some of the numbers, and I think the IMF numbers came out very recently. These are the latest numbers. So they are actually projecting a GDP decline of 1.5% this year and a growth of 2% for the next year. What we are actually in our assessment, actually, we do obviously our own numbers and macroeconomic analysis. Based on that, our understanding or our projection is that for the fiscal year 2020, which is closing in June, we may see a zero growth or less than 1% negative growth. But I think IMF number of 1.5% negative growth is quite aggressive. And at the same time, inshallah, if this pandemic situation is a control over it by first quarter fiscal year 2021, which is August, September, and things come back to normal, then we can see a GDP growth of about 2.5% to 3% in the next year. Having said that, I think one of the important points probably that IMF is also missing in its forecast is certainly the decline in the inflation and also the decline in the interest rate, which Arif also mentioned, that the policy rate is down to 9%. And if you look at the secondary market yields, the 6-month Treasury bill yield is now trading at about 8.05%, which means that the secondary market is anticipating another cut of at least 1% next month. So with these inflation numbers, certainly it will give some respite to the industry, which actually, as we know, that many local industries like the cements and steel, they expanded substantially in the last few years in anticipation of increase in demand. And obviously, when they actually started their expansion or started planning their expansions, the interest rate environment, we were in about 6 to 7% regime. And the policy rate went up to 13%. So certainly those feasibilities were totally out now. But if we go back to like something like 7 to 8% policy rate, then I certainly feel that those economic, feasibilities will certainly be working more robustly. And in terms of the projections, in terms of business model, the profitability will substantially increase. So I feel that given that we have about 80 to 90% of our GDP is based on domestic consumption, and if you look at the listed sector as well, cement is almost purely domestic demand, about 75 to 80%. Steel, 100% domestic demand. Then oil and gas is 100% local demand. Pharmaceuticals, almost 100%. So because our export to GDP is less than 10%, I personally feel that, inshallah, if we can revive our domestic economy, then we will certainly be about 80 to 90% band of our original projections of GDP.
I'm going to carry this over to Kamran Saab and ask him his thoughts on corporate sector profitability, as Shoaib Saab alluded to. I mean, we are in the middle of result season, which will pick pace now. So what is the outlook for corporate profitability in your view? Which sectors might do better? Which sectors might do poorly? And secondly, a related question would be, what would you say to investors right now? Is this a good time to invest? Are valuations attractive enough, or should they wait a little bit more?
I think a very interesting question, Raza, and most people would like to listen to this comment. But before making this comment, I think the most important thing, because I have my experience, and specifically people who are watching this live, they come from a learned fraternity class. So it's a dynamic situation. And this dynamism is all going to come down to the fact how long a particular situation is going to persist. If we are talking about the pandemic, and if we are talking about effects in Pakistan, then what we have to see, how long Pakistan is going to go through these lockdowns, what would be the time when the economy is going to open up? If it is going to open up, would it be partially functioning, and how long it is going to take to become fully functional? Or maybe a different situation where we would have to learn a different way of life, which is a possibility if this virus, God forbid, is going to stay for a medium to longer term, as a lot of people have been talking on a lot of informed channels, such as if I talk of CNN or BBC, the international reports as they're coming out. So the corporate profitability, if we have to speak, I think if, as the government is saying, the situation improves next month, then I think what we are going to see on an average, there would be a decline of about 20 to 25% in terms of the earnings. But this is not going to be, sector-wise, the performance is going to be different. For cyclical stocks, such as Mr. Habib was talking about, the package that has been given to the construction industry and his thoughts on. I think we are going to hear more from him on that area. If you factor that in, and if you see the demand that has sustained, so I feel within sectors, cement and steel, they would be the least hurt as we speak, and they would be the beneficiaries, obviously, of these interest rate cuts and stuff. But when I go on and move to the E&P sector, I think there the situation, whether you talk of E&Ps, whether you talk of refineries, or whether you talk of OMCs, it's directly related to the oil price and a lot of other factors which are currently not suitable. And in that case, their profitability impact can be north of 50%. As we are witnessing, as we have seen in the market, the decline in their valuations. Then there are other sectors. Some are export related, such as textiles. So if you would go and take a deep dive into how textiles are going to perform, then the most important thing is what packages are going to come out from the government going forward, because so far the government has done, I think, reasonably well in terms of accommodating the exporters, and the kind of packages that have been announced to take care of the energy requirements, to giving them refunds as far as FBR is concerned. But what we need to analyze is that there would be an overall contraction in demand internationally. So if that contraction, then probably that sector would also suffer. So, so the answer to this question is going to depend on how things are going to, look going forward into the future. Autos, if you're going to talk of specifically, then I think their situation saw a paradigm change even before the COVID pandemic had hit in Pakistan or elsewhere, because there were new players who were coming into the market. The depreciation that had already happened, which increased the import cost, and in our case, the small ranges vehicles, which were getting out of the purchasing power of the buyers. So I think autos will pick up late, and one has to see how they are going to fare well. Banks, there are too many questions right now. The negativities obviously include that the interest rates, since they're coming down, so the interest income is going to drop. And if the pandemic lasts for a longer period and the businesses are not doing well, then in that situation, the infection ratio, we will have to look into the balance sheets of the banks also. But the positive side would be that as soon as the pandemic is controlled, and the sooner the better, the credit offtake is going to be there. And secondly, banks who are holding in government treasuries, they would book good capital gains in a decreasing interest rate scenario. So if I cover, or if I sum it up, I think we have to focus on the market from different scenario stages. Scenario one should be that soon, as the government is expecting, or as we all would like to expect, then maybe 20 to 25% contraction in terms of corporate earnings going forward. But sector-wise, I've given you the breakdown that oil would be the worst hit. And if this continues into medium term, then certainly there is going to be more pressure as far as the corporate earnings are concerned. But there is an international perspective to it also, because currently Pakistan is trading in terms of P multiples close to somewhere around 5. But the emerging market class of which we are part of is trading at about 13.5 or close to 13. So the discount historically has been in the band of about 30 to 35%, in worst situation about 40, in the best situation close to 20. So let's take 30 to 35% as an average. Currently that discount has increased enormously. It's north of 60%. So that gives you some comfort that that discount will go away, which would result into the price earning multiples improving. Because a multiple of 5, I think if my memory serves me correct, we have seen such multiples in the worst crisis that we have faced in the capital markets, that was back in 2008 and 9. So we are absolutely in the same zone in terms of the P multiples that we had seen in 2008 and 2009 times. So for investors, it can be taken as a very good opportunity, but with a mindset that they would invest from medium to long term. If that is the case, then investors are going to be sure winners. If they have the capacity to sustain and to hold for medium to long term, then they are going to make excellent money out of this. And that should be a class to look into in terms of investment when you talk of Pakistan equities business. Secondly, there are two sets of investors. One is a new investor who would be coming in just now. For them, great opportunity. So they can invest about 30 to 35% of whatever their investment size is at these levels, and then wait to see more opportunities, whether the market goes down or whether it goes up, accordingly reinvest. And the portfolio managers who are already invested into the market, so they will have a different strategy to put into place. That would all depend in which sectors they are already invested. Because going forward, most of the people think that we are going to relate the market to, the index. Index technically is a misnomer. You will have to cherry pick. You will have to see, because if there would be a downward pressure on oil, or if there would be a pressure on banks, your index is bound to go down. But there would be other sectors that would be performing very well. But the index levels will not change much. But if you're, in terms of your selection, if you select the right stocks based on the current environment, based on the government policies, based on the company's focus, and if you make that informed decision, then you are going to do very well. That's, in a nutshell, if I have to take a call on what you just asked.
Got it. Thank you for that comprehensive answer, Kamran Sahab. First up, I'm going to turn to you and slightly take a step back. Shoaib Sahab mentioned that we're an economy that consumes, doesn't save that much. We are also a high cash economy. Do you see any opportunities from this crisis? Do you think we will move away from cash in a post-COVID-19 world? And do you think we will be able to save more? And if so, what does that mean for our capital markets? I mean, as I understand, it's a very underpenetrated market still. What are your thoughts on this?
I think those are very important points, and I'd just like to link that to some of the points that were discussed by Kamran, Shoaib, and Arif Saab. We have, right, I think there are two or three important things. One, as Arif Saab was mentioning, that we do have a lot of potentially, especially on a balance of payment side, space opening up because of the different dynamics that were discussed, including potentially the G20 relief on debt repayments. Now, we've had this kind of relief a number of times in our economic history. The most recent one being when the Paris Club rescheduled our debt for 30 or 25 years. And we have regrettably not always taken advantage of these fiscal and balance of payment spaces that have opened up. So it is really important that we make use of this crisis to continue to making structural changes. And the efforts that were being made to document the economy, to increase our tax base, we mustn't take this crisis as an excuse to pull back on them. Yes, I understand one has to be flexible and one must be flexible in this. But in the long term, if we are not even able to raise taxes to be able to pay our operating expenses, forget about investing for the future, then you would not, Arif Bhai would not invest in a company that didn't even have working capital to pay its operating expenses, let alone have enough cash flow to invest for its R&D and capital expenditure. So I think that is very important, and we will have to see how the macro response evolves, as things become clearer. I think right now it is very important, and to some extent we have now caught up that our policies on the fiscal and monetary side need to be ahead of the curve. We must have more liquidity and slackness in the system that we think may be needed, because we don't know, as was being spoken about, exactly where things will go and settle. And if things settle down, liquidity and rates can be pulled back very quickly. But if we don't do that, then the economic damage can take years to recover from. So I think that is important, but that mustn't be taken as a reason to let go of any kind of reforms that are needed, in the economy. I think linked to that, you're right, our savings, investment rates, Pakistan is perhaps just about the only major economy in the world where the cash to GDP ratio is actually going up, as opposed to coming down everywhere in the world, including in our immediate neighborhood, immediate region. And that has huge policy implications, because the ability of the central bank to use interest rates to make an impact in the economy is reduced as cash to GDP ratios go up. your multipliers, everything changes. So these are important, which is what I'm saying. These are all linked, these structural changes, that if we let go completely, then in the long term, rather than gaining from this crisis, we will perhaps be at a disadvantage compared to other countries. And at a more micro level, we must recognize, as human beings, we always revert back to behavior, and we revert back to our comfort zones. And that is something our businesses, our entrepreneurs, our investors, we must remember as things settle down. And as Arif Bhai was saying, and as Shoaib was saying in the beginning, the changes that we have seen, it's very easy for us to forget that and go back to the old way of working. And it's really businesses and countries that will remember this and continue going down the path of digitalization and more efficiencies that will come out as gainers. And I already see this in some of the conversations. People are keen to get back to the way it was. And yes, to some extent that will happen. But if we really are not able to break those old habits and move ahead, then we will continue to lag behind the rest of the world. I don't know if I've answered your question or not. Maybe it was a bit meandering, but I just wanted to share those thoughts with you.
No, I think those are excellent thoughts, and we're gonna return to them later. But first, I'd like to turn to Arif Saab and ask him about, obviously pick on his experience as an industrialist, pick on his business experience. We've heard thoughts on GDP growth, we've heard thoughts on corporate profitability. In particular, Arif Saab, I want to ask you about the construction sector, because that is linked to so many other sectors, and the government is obviously supporting it. What are your thoughts on the incentives that have come for the construction sector? What is its outlook? And secondly, I want to talk about the fertilizer sector as well, or the agriculture sector. But first, I want to hear your thoughts on the construction sector in particular.
Yes, I think for construction sector, in fact, government has announced a very generous package. The industry, in fact, whatever industry had demanded, that has also been given, and whatever the industry had not demanded, that also has been given in this package. This, in fact, will help in creating a good enabling environment for the development of construction industry in the country. You see that there were three major issues confronting the construction industry. Number one was the approvals from the regulatory authority. The approvals from the regulatory authority for the development used to take a lot of time. There used to be a very high corruption in those institutions, and it was in fact creating hurdles for the quick start of the quick development work. So I think that was the number one problem. Number two problem was that the buyers of the developed projects, they didn't have the documented funds with them. They always, in fact, ask for buying of the property in cash. They, in fact, whenever a corporate house used to offer them their products through a official payment, they used to decline it because they said that we don't have the amount which in fact has the wealth reconciliation with the tax authorities. So that was the number two problem. And number three was because most of the real estate purchase in Pakistan is through equity. There was very, very little bank financing available for purchase of real estate, whereas we have seen in the international world that most of the purchases are from mortgage financing. So these three elements, in fact, were creating hurdles in the development of the construction industry in Pakistan. We are short of houses. We are short of developed properties in Pakistan. There is a very good margins available in the development business as well. But because of these three issues, so the Abad, in fact, entered into a dialogue with the government. We had a meeting with the IMF team as well, and we also, in fact, emphasized them to the importance of these issues. So they came out with a good package, and they also given that the even developers would not be as the source of investment until December 20, and then they will have to complete the project by September 2022. Then there are some other, the fixed taxation regime has been introduced. The withholding tax regime, in fact, has been relaxed. So these all will definitely be helping the industry. But in fact, whatever the government has given, I believe that the ABAD members will have to work hard to in fact convert all these incentives into real action. So the banks and the central bank will also have to work with the industry so that good resources are available to finance the new developments. So I think it will definitely, as you said, that many of the industries are dependent on this. A large the job provider is this sector, so its benefits would also be coming out to the for the creating of employment in the country and for in fact supporting the industries here as well.
Ashraf, one more question, follow-up question, and this is more to do with agriculture, and this is something I've been thinking about a lot these days. So there are two schools of thought. One says that, in a COVID world, Pakistan is at risk because it's a very large population, it's a very dense population, so disease can spread quickly. But there is another school of thought that says, look, at least we have a captive audience, there is a backstop to demand, and this domestic demand, as Shoaib Saab said, most of our industries sell locally, is actually a net positive. So where do you lie? I mean, what do you think on this? I mean, are we at risk because of population, or is it actually an advantage to have a large population in this environment?
Yeah, I think we are in an advantageous position there because we create whatever, in fact, we produce whatever is needed by our population domestically. So there, I think there is a lot of scope for improvement there. And there, Pakistan also can, in fact, deal with its current account deficit or balance of payment issue by, in fact, improving the yields there, by, in fact, using the modern technology there. We can, in fact, increase the yield and would be beneficial for not only growers, I think, for the country as well. So there again, the government, in fact, has come out with some good measures. The GIDC, in fact, has been withdrawn on fertilizer industry. That has brought down the urea prices by 400 rupees. That is more than 20% of the value. And I think other benefits, this reduction in oil prices will also help them in reducing their energy cost as well. So I believe that the demand in the food items and the importance of food items, and I believe that the foreign investment would also be attracted in this area, because Pakistan has a fertile land, Pakistan has surplus land as well, and Pakistan need introduction of technology there. So by these measures, there is a lot of potential in this sector. And because of COVID, this sector has not been affected in this period as well.
Understood, sir. Shoaib Saab, I'm going to turn to you, and apologies for keeping you waiting. I just want to know, and I know you mentioned at the start that it's been a little bit more challenging to get new customers in the current environment. But in your experience, historically, I mean, this is not the first time Pakistan is going through a crisis. Historically, what happens in a crisis? Do you see new investors coming in, or do you see people shying away? How does that work? And what about your current investors, especially on the retail side? How has their behavior changed? Are they putting more money to work? Or again, like I said, are they shying away?
Okay, so that's a very interesting question. So in a crisis situation, certainly there is always a risk aversion. So it takes a lot of effort actually to convince the new investors to come in. And I think we follow the normal curve where 5% of the people are early movers, and they would certainly jump in early. And it goes through the cycle that they're early movers, then they're late movers, and then they're laggards. I think normal economic cycle is, or the investment behavior cycle is followed. So there are, yes, certainly there are some new investors who come in who have never been to equity market, because we certainly offer products in both on the equity side and also on the income side and the money market side. So for us, actually, it's so much easier actually to go back to our existing customers who have not invested in the market over a long period of time, and they are normally invested in the on the money market side. Having said that, I think what we have seen this time around is that two things are happening. One thing is certainly there was a meltdown in the equity market, but now it is also followed by a decline in the interest rates. And this is a sharp incline of 425 basis points in 1 month. So practically, while the investors were very happy, making about 12, 13% return on money market funds earlier, which was on average over 12%, now obviously those returns are coming down by something like 400 basis points. So that makes a big difference, and there is a big incentive for them to go into the equity market and take favor of it. And I feel that those investors who come into the market at this point in time, because and if they come with an intention of holding on to their breath for like holding on to their investment for about 2-3 years, they make tons and tons of money. And then they become your regular investors. They become very committed investors because they've seen the cycle. They know they have gone through this stress period where immediately after investment, sometimes the value goes down. It may go down by 5%, 10%, 15%. But if they look back in time after 1 year or 18 months or 24 months, then certainly they have made like 20, 30, 40% kind of return. So yes, these investors, but obviously the quantum of such investors is very limited because everybody becomes risk averse. So it takes a lot of effort, time and effort actually to bring that such kind of investors to the market. As far as your second part of the question about the existing investors is concerned, I think, as I said, that because of the decline in the interest rate, there is a concern that this money actually, which used to earn 12% in the money market funds, would now be earning something like 8 to 9%. And from that perspective, I can see that there's going to be some shifting of money from the less risky side to the riskier assets and equities, certainly, because one of the important things is that if you look even at the dividend yield of the market, our dividend yield is about 6 to 7%. And if you take a basket of stocks which are high dividend yielding, that dividend yield could be about 8 to 10%. So that dividend yield would certainly be even higher than what you can make in a money market fund. So I personally feel it's a long process. It takes a lot of time, but over a period of next few months, I can see the money flowing back from the money market side to the equity side. If I may add one important aspect here is that I'm talking about the institutional investors, especially the retirement funds, because all corporates have their retirement fund, provident funds or gratuity funds. What we saw in early part of 2020 was that there was a lot of money, in fact, not early part of 2020, but late part of 2019. As far as the mutual fund industry is concerned, what we saw was that because of the decline in the month of August and September last year, a lot of money moved out of the equity funds, and it with an intention to go into long-term PIBs at 14%. Now, obviously, there were some people who were able to convert that money into PIBs, and certainly they're sitting very happy and very pretty right now. They're going to make 14% for 10 years, 5 years if they bought 5 instrument. But my understanding is that bulk of those people, of those retirement fund managers, they actually waited for the interest rate to go up further. And there was a general expectation at that time that the interest rate will go up to 15%. And because everybody was focusing on locking the money for 5 years or 10 years, obviously 1% additional return would have made a lot of difference. So what I have seen is that many of those retirement fund managers were not able to actually go into PIBs at that time. And there is a potential that now with the rates coming down to 6 to 7% on the banking deposit and in the money market funds, that money can certainly come back to the equity market in Pakistan. Because if you look at the actuarial assumptions, which are normally uh, made by the actuaries when they are evaluating or valuing those retirement funds, they are normally using about 10% to 12% return. And certainly under the current interest rate environment, it will be almost impossible to make 10 to 12% return. And especially in case of defined benefit funds, certainly there will be a shortfall which have to be made up by the company. So I personally feel that certainly if we get some stability in the market, if the COVID situation comes under some control, and we start opening up the industries, certainly there is a lot of potential actually for new money to come into the market.
Thank you for that, Shabsab. The next question is to do with perhaps new listings, investment banking. I'm going to direct this question to Kamran Saab and to Farooq as well. And you can decide, whoever wants to go first. But obviously the environment is not right for new listings, or maybe it is. I don't know. Maybe I'll leave you to answer it. Is there anything that the regulator can do to facilitate new listings? So that's the first part of the question. And B, the second part is, or is this actually a good time? Maybe this is a good time for M&A activity at distressed valuations. So just your thoughts, Farooq Saab, Kamran Saab, on this. Anything we can do to get the process along?
I think next question. Should I go first, or Farooq, would you like to comment first?
Maybe Kamran, you go ahead.
Thank you. Regarding the IPOs and stuff, I think I wanted to congratulate Farooq because under the lockdown situation, we launched 2 ETFs. So it's unprecedented. One, that ETF's been launched, and 2, in such an environment where the things were not so good, and I was part of that process. We are the market makers, and we really put in a lot of thought into it. But at the end, we decided that we will go ahead with launch of ETFs, and Alhamdulillah, it has proved to be very successful. Second is that on one of the transactions on which we have been acting as advisors, though it is in the debt space and Islamic Sukuk by Bank Islami, so its listing was today. So both have gone successfully. But to answer your question, you see, again, investors now, or companies that would need money, they would certainly look towards capital markets to provide that as a source of capital. So I do not see any problem on that side. But it all depends how your business model has changed post-COVID. Now, if structurally the company is intact and they would be hungry for capital, they would love to come to the Pakistan capital markets to raise money from the Pakistan Stock Exchange. So we are advisors to many transactions. Arif Habib is, as Mr. Habib is also sitting here. So timing can fluctuate depending upon the sector in which they are in. As long as the sector is good, the company is rock solid, I am absolutely sure that they would be able to raise money from the capital markets. The only difference would be that if they are anticipating that they would get, say, a premium of X, there would be a compromise in terms of the premium that they're seeking. As long as the company is good and fundamentally very strong in the right business environment, and they have their business model in place, which they can successfully demonstrate to the investors who want to invest, so they would be successful. The other part is for companies which generally go for listing, in a situation where there is generally an environment where the markets are going up, the economy is doing very well, and in that herd environment, weaker companies or companies which are not so strong, they also see daylight when it comes to listing and raising money from public. I think they will see a lot of issues in such an environment that for them to get themselves listed would not be an easy task. Regarding M&As, certainly, groups that are rich in cash and who have got flexibility to look for business avenues. And by the way, when in such crisis situation, there are smart investors locally and internationally who wait for such opportunities, who wait for such moments where they can go after and deploy their capital in a meaningful way where they can take a view, maybe from shorter term to longer term, to make money. So M&As would be, one of the features of how the world looks post COVID-19. And you would see a lot, in my judgment. It all depends how the particular sponsor is focusing. But if the focus is at the right place, if the focus is on opportunity, then certainly M&As should feature. So I'll pass on to Farooq, please.
Thank you, Kamran, and all good points there. Just to add a couple of things, and yes, thank you for highlighting the ETFs. I think it's a significant development in our market. ETFs is by far and by a long margin the fastest growing asset class in the world for the last sort of 8-10 years, and regrettably we didn't have any ETFs in our market. And also, it's the first new product that's come out on the PSX, I think, for at least 8-10 years. I can't remember, but we really haven't had any new product. And it's an ideal product because it marries the ease of being able to buy and sell shares, with the passive management of what you get from a mutual fund. So for new investors, existing investors, local, retail, institutional, pension funds, it really is an excellent instrument. And really hats off to the two asset management companies, NIT and UBL and JS, as well as the regulator SECP, in working with us to launch it. And we did a soft launch, and we'll do a much broader launch once things are more settled. But certainly, I would ask all asset management companies to look at this, very, very carefully. Along with that, the other significant thing which you may have seen in the papers that came out a few days ago is, we've had equities in our market, but we haven't really had a proper debt market develop in our capital markets. It's been dominated by the banks, and there really isn't any significant secondary market at all, which is neither in the interest of the issuer, really, nor in the interest of investors, because you can't really determine a true yield. You can't really determine, what the real, interest rate should be. And so this 200 billion powers sukuk issue, we work closely with the government's debt management office, as well as with the support of the SECP. And for the first time, we're going to have a debt instrument that's coming on a book building basis in Pakistan, just like all the equity issues are. So that will allow a much broader group of investors to be able to come in, and hopefully, a secondary market will start developing in it, and the BATS system in the market will become, inshallah, as active as the CATS system over time. So that's also a significant development. I think in terms of IPOs, there is no one valuation in the market, right? Even in the market was it 8-10 times PE. There were certain sectors and companies trading at 20-30 times PE, and some that were trading at 4-5 times PE. So it really depends on, one shouldn't get discouraged if there's a good company that you will not get a good valuation in the market because the overall valuations are less. I think what I would encourage people to really think of is, what can you do with that money? There are so many opportunities that may open up, that if you keep waiting for your own valuation to go up rather than raising the money to deploy it in exciting opportunities, not just new IPOs, what we are seeing in the international markets is, a lot more capital raising by existing companies. So I would also encourage the investment banks to go and talk to companies, because you will see perhaps the need for a lot of rights issues and the placement of those rights issues for companies to rebuild their balance sheets and to take advantage of opportunities in their business line. So I think we will see a mix of new IPOs, but also a significant amount of capital raising by existing companies, which may need to be privately placed. I think Raza's.
I think we have lost him.
He'll be back. I think the point about the market and the value in the market, that's definitely there. But I would just ask, as market participants, really we have to encourage the long-term outlook. So in my view, there really isn't any good or bad time to come into the market. You have to, if you take a long-term view, you buy good companies. In the end, the risk return ratios, favor you. It's when I'm sure many of you get asked. I often get asked. I have some extra funds for 3 months, for 6 months. What share should I buy? And that is such a wrong approach. If you want to trade, unless you're really gifted or you get lucky, you'll make money. Otherwise, Kamran will be very happy with you as a client. But as an investor, you take a long-term view, and that is what really we need to happen. And for small investors, they should come in through the mutual funds. And if you don't have the ability to really, or the have the research capability to look at individual shares, then really the right way to come is through mutual funds.
And if we can
one thing, if I may add one more aspect here, because we are talking about from the issuer's perspective. I think from the investor's perspective, I think one thing which is normally asked by many investors, and I saw some questions on the Facebook Live as well, is that there has been a lot of foreign selling in the market in the recent past, and whether and why the local investors are not stepping ahead and actually making those investments, and whether there's sufficient capacity within the local investor to absorb that outflow which is coming from the foreign investors. So certainly, as we know that globally there is a crisis, and what we have seen is that, in fact, in other markets there's a lot of liquidity crisis. Just like mutual funds in Pakistan received redemption when the market was going down, so globally also the money that comes to Pakistan market is mostly coming from either the hedge funds or from the long-only funds or mutual funds. So that there has been a huge outflows in that market as well. I was looking at the data for India, and normally they have an inflow of about $12 to $15 billion in a year. I have not looked at the data in the last few days, but I saw that to date, I think they had an outflow of about $8 billion, as opposed to an inflow of about $12 to $15 billion in a given year. So certainly this is an outflow, but from the perspective of the structure of our local investors, I personally feel that there is certainly a very important pillar of the market which is not very active at the moment, which is the long-term investors like the retirement funds, the insurance companies. And as we all know, because this is not a secret, it's a public information, that we have huge insurance companies which have very long investment horizon. And normally they do invest in 10-year, 15-year debt securities. They invest in the real estate sector, but they have been very shy to put their money into stock market because of this. A lot of concerns about how the NAB is going to look at them, and there's accountability, basically accountability from within the organization or from even outside the organization. So as we all know that at the moment, actually looking at the numbers, the total holding of foreign investors at the moment in Pakistan market is now between 1.5 to $2 billion. I'm talking about the portfolio investment. I'm not talking about the foreign direct investment, which certainly Nestle has 75%, or Unilever has 75%, or Shell has got its 75% shareholding in the company. That's FDI. So that is certainly, unless they decide to, obviously that is not, they are going to sell that brand actually. So as far as the portfolio investors are concerned, about 1.5 to $2 billion. Now look at the potential of our local investors. Just taking the name of 2 or 3 like local insurance companies, State Life, FU, and NGI. Collectively, they have a portfolio size of the fund size of about $1 trillion. $1 trillion, and if certainly NGI and EFU are already active in the market. From the perspective of State Life, what we have seen is that the fund size is about 800 to 900 billion, and they are probably 8 to 9% invested in the equity market. If they decide to put in a 10% of their fund in equities, that's about 80 to 90 billion rupees. So certainly there is a lot of appetite, and I think there is a need to work on with the government, with the regulator, and for all the capital market constituents. It's very important to
kind of work on this, that these long-term investors have a bigger role in the actual market. At the moment, mutual funds, individuals, brokers, and foreign funds. These are the major components of the market at the moment in terms of the trading volumes. And certainly, individuals are obviously, certainly, there are long term investors as well. But generally, their focus, as Farooq just mentioned, that people come and ask about investment for 3 months and 6 months. So there is a short termism involved. Similarly, at the same time, as far as mutual funds are concerned, now there's an increasing percentage of the retail investors coming into the mutual funds. So they follow the same tendency of jumping into the market when it is going up and actually getting out of the market when it is going down. So it is the real pillar of a capital market is the long-term investors, and I think there is a need to actually collectively for all of us to work on that so that our capital market is more stable and there is a long-term capital available for investment in the market. Raza, we had lost you, so we just continued the discussion.
I apologize for that. I had some technical difficulties, but I'm back now. So I'm just going to pick up from where you left. I understand you're talking about the depth of the market. I mean, obviously, I would obviously want to know, from a current market perspective, we've seen a lot of foreign selling, and it's not just a Pakistan-specific phenomena. It's something that's been happening in other markets as well. So, is there enough liquidity? I know Arif Saab mentioned liquidity at the start. Is there enough liquidity in the system to absorb foreign selling? I understand, we still have about $2 billion of investment in the equity market as of this point in time. So what do you guys think? And obviously, all of you guys are equipped to answer this too. Whoever wants to go for it can go for it.
I think Shoaib was just answering your question before you joined.
Okay. Oh, I missed this. Perfect. So that's already answered then. I will then move on to the next question. Arif Saab, this is relevant for you. And I think sometimes you hear that sentiment is just so important, and sometimes people argue that financial markets are all about sentiment. Obviously, business sentiment, consumer sentiment has taken a huge hit, right? And obviously, the government is taking steps to address that. Do you think it will take time for sentiment and confidence to improve, or do you think this can happen very quickly once the COVID pandemic ends?
I believe it will come back very quickly because, as I said initially, that I see a lot of liquidity in the system post-COVID. And because of that, I think a lot of money would be chasing the investments, and particularly the equity investment. I think equity investment is very well placed presently. They are very, very attractive in valuation. They, as discussed by the panelists, that offer a good dividend yields, offer good valuation. And I think the basis of valuation now would not be the historical performance of the companies. The investors would look at the prospective performance of the companies. You see that cement industry, you take cement industry, cement sector is now performing well. But if you would look at the quarterly results or the annual results, those would not be good. But post 2020 financial year, the cements are expected to do well. That's why the investors are chasing the stocks. Similarly, the steel sector also is active. So I believe that the E&P sector would also be a sector where whoever would like to take a view on the price of oil, international oil prices, they have the opportunity to take a position in these stocks, E&P stocks, because you are not able to, in fact, able to take position. You see that presently there was a negative. I think if I would have that opportunity, I would put that oil in my underground taxer in my house. But I don't have that facility here. So once the valuations of these companies would be properly reflected, I will have the opportunity to take a view on the future price of oil as well. Similarly, for banks, I believe with this the state bank package of deferring the debt repayment installments and deferring even for restructuring, that would in fact take off the pressure from them of making provisions. So that I think would also be once the things would be normalized. I believe that the capital market would see a lot of interest, and in a shorter period of time, I believe the market would start reacting to these positive developments. So I think now the capital market is the equity market is the only place which offers a lot of values and would see. As far as the new companies are concerned, I feel that unless the market improves by 30-35% from here, you would not be able to see the new issues because at these valuations, the issuers would not come to the market to offer their equities, because presently the regulations are such that the startup businesses are not able to raise money from the public because they will have to, and in fact they are required to come to the market for the expansions only, for right issue, etc., etc. And some of the companies would also come to the market to raise additional capital for their ongoing businesses, and would also come if they would like to disinvest part of their shareholding and get the companies listed. But here again, I would like to say that when we were having a discussion in taxation committee with Farooq Saab, I asked a question: why a company would in fact come to the stock market for listing? So as personally, I don't have many reasons to convince the companies that they should come to the market for listing, because our regulations are such. When we plan a new company, we plan a new investment, the sponsors need to give guarantees for whole of the capital. They, in fact, when they go for the financial close, the financiers, in fact, demand whole of the capital commitment. And once that has been achieved, I think then there is not any incentive to go to the market. So I think we, in fact, will have to engage with the regulators, with the policymakers, to, in fact, to achieve a enabling environment. As per the construction sector has achieved that enabling environment, I think the capital market will have to also engage with the policymakers and for the regulators to review whole of the system, so that the new companies come to the market. You see, our market, in fact, is very weak in getting the new listing at the stock exchanges.
Now, in the interest of time, I'm going to move to one last question, which will be common to all panelists, and obviously I would invite you to make concluding remarks as well. But obviously, we've seen very tough times, not just for Pakistan but for the world. We've seen a lot of layoffs the world over, and there's a lot of uncertainty around. But from the perspective of your organizations, and I also ask this because we've got a lot of young people listening to us on the platforms of ACCA and CFA Society Pakistan. What I want to ask is, from your organizations, how do you see hiring in the next 12 months? Unchanged, pickup, or less employees? And also, if you would like to make one final comment from your sides, any message that you would like to put across. So that's a common question for all of you guys.
So if I may start here, for us in terms of hiring,
so maybe if you want to start this up.
Yeah. So in terms of hiring, your question is certainly, as I mentioned earlier, that the penetration by the mutual funds is still very low and very limited. So there is a need and a room to expand your teams, to have more people in the sales. As far as the other business sides or business operations are concerned, certainly because of the technology, there is no need as such to increase your manpower. Operations, finance, fund management efficiencies are coming because of technology. But as I said, that the reach of the mutual fund industry is very low. So my own view about our firm Al Mizan and also our mutual fund industry is that in terms of expanding their sales team, this will continue and as a normal, and the normal plans will be implemented. In terms of technology, certainly the use of technology will increase. So certainly now most of the asset management companies are giving mobile apps, they have given the mobile phone, smartphones with an app, so that They don't have to be in the office all the time. They can go out. So the need for physical space will reduce. But in terms of recruitment of people, I think that will continue. And I forgot the second part of your question. What was it, brother?
So the first was, obviously in terms of hiring, which you answered, and if there's any other concluding comment from your side, any message you'd like to put across, up to you, if you would like.
Yeah, I would just say that certainly we should not lose hope. We have to stay safe at the same time. I think we have to make sure that we understand that this is a new normal now, and the whatever as Farooq also mentioned, that there are quite a few new learnings for all of us in this situation, and those learnings should not be forgotten after this pandemic is over. I don't know how long it will take to be over, but certainly there are new business models emerging, new opportunities are coming up. So we should focus on them, and certainly those who embrace their change in a positive manner will be successful. That's it from my side. Thank you.
So I'll take the opportunity to go next.
I can go next if you like. So in terms of hiring, we would look to I think add selectively. We will see there are parts of our business where we will need to add selectively. But overall, I don't think there'll be a huge hiring spree, because PSX already uses technology a lot. I think in terms of concluding remarks, I would just say that both at a personal level as well as a business level, it'll probably be good to stay paranoid and stay conservative, because we exactly don't know how things will pan out. I saw a question flashing on the screen that what will happen if it continues for a longer time period, because we don't know whether it'll end in 1 month, 2 months, 3 months, or 9 months. So I think it is a good idea, both at a personal level as well as at a business level, to conserve cash, to stay conservative, and see how things work out. But must remember the lessons of this and see how we all need to pivot in our personal behavior as well as in our business behavior once things start settling down. I think that will be very important for success.
And if you would like to pick up the question now.
Yeah, regarding the hiring, and certainly people have been scared that there would be layoffs. So the answer is absolutely no. Rather, in such an environment with the use of technology, obviously you need manpower to increase, because capital markets, the one thing where we have not achieved success, which to me is a real success, is expanding into the retail base. And for that, you need to increase your the employee base, and we have continued to do so over the past number of years successfully, and we have achieved excellent results, and we will continue to do so going forward with an effective and more efficient use of technology. Regarding the comment, I think the most important thing that I would like to say, because we are in such times that if you read the WhatsApp groups, if you see the TV channels, I'm surprised that Pakistan has so many economists and so many people who know about COVID virus and how it is going to cure the humanity going forward. We should stop making sweeping statements. That's imperative. We have been criticizing the government way too much. I think the push that was put on the central bank in terms of reducing the rates and the way they were taken to task, I think it's not needed. I'll tell you the reason why. We have our wishes. There are people, who are from vested groups. There is nothing bad in it. They can demand, but the government is in a very different spot and a difficult spot these days. I think we should appreciate our economic managers. We should appreciate the Central Bank of Pakistan also, and we should appreciate the people who are at the helm of the affairs. There can't be a perfect solution to this problem. We are talking about that we are getting a lot of space because oil has come down, because interest rates are being lowered. So we would have fiscal space because government is the largest borrower. So there would be a reduction in the government interest payments. But at the same time, the kind of package that the government needs to announce is way bigger than the reduction that is going to come in. there would be contraction in taxes, and ultimately you will be going for foreign borrowing. So that blend and that mix, I think they have the right data. I firmly see that they are moving in the right direction, maybe if not 100%, but reasonably well. So sweeping statement should go away, and we should have confidence in the system, and we should have confidence in the people who are currently managing this entire scenario. Thank you.
Thank you for that, Karan sir. Arif sir, last word with you in terms of hiring in your businesses, and any last message from you.
In fact, I don't see that there would be much hiring this year, because most of the businesses are struggling, and they are struggling for, in fact, survival. And first, they will have to go through a consolidation phase, and then I think would go for expansion and for diversification. So, but I think in the area of marketing, I see a lot of opportunities, because now all the business models would change, and most of the businesses, I think, would depend on human resource for the marketing. May it be capital market, may it be construction or real estate development, and other businesses as well. So there, I believe there would be some scope and potential. As far as you see, Pakistan is concerned, Pakistan is least affected economically because of this COVID. You see, internationally, the airline businesses, the hotels, the large-scale retails are the main sufferers of this COVID. And the Pakistan, in fact, doesn't have the large businesses in these sectors, so would not be that much be affected. But internationally, I think these three sectors will see disasters. The Pakistan, in fact, has the strength of its own population, and many of the businesses are dependent on local consumption. So that, I think, I see some quick turnaround. And once I think this would subsidize, the COVID would subsidize, we see rapid recovery in Pakistan, because Pakistan has a lot of potential there. And with this enhanced liquidity in the system, I think Pakistan will have a better time as compared to other many of the developed countries.
Sir, thank you so much for that, and thank you so much all our other panelists. I think in the interest of time, we will have to conclude this webinar now, but I think we've had an excellent discussion on a lot of diverse topics, and I hope this was useful for our audience as well. Thank you again, gentlemen, and I hope to do this exercise with you again sometime soon. Thank you so much, and have a great day.
Thank you.
Thank you so much.
Thank you, Ji.
Thank you very much.
Thank you. Thank you, Ji. Khuda Hafiz.
Yeah.